Jaana Remes es economista y socia de Mckinsey Global Institute, experta en productividad, urbanización, competitividad y crecimiento. Le damos la bienvenida a la señora Jaana Remes.
Good afternoon. Thank you very much, Andy, for the invitation, for being here, and welcome to all of you here. First of all, congratulations to all of you for the 2 Olympic medals in Colombia. You are 2 ahead of us in Finland, but I'm hoping we'll be catching up. Congratulations. Also, congratulations for choosing a very forward-looking theme for your event, digitalization. Digitization, digital, whatever you call it. It has many names, and it's hard to define. However, we at the Mckinsey Global Institute look at global trends across the world, across different areas, technologies, demographies, etc., and there is no trend that has more potential to change the environment and to be a real transformative force on what's happening ahead. In many ways, it's influencing a broader set of activities, it goes deeper into each one of them, and it also tends to happen faster. But because we are in the middle of this transformation, it also means that what companies do and what governments do together, that will shape how the digital world will look like and where we will end up after the digital plays itself out. And I think it's great that you are thinking about it at this time and thinking what that could mean for Colombia, so congratulations. I hope some of the research that we have done a good part of the last decade thinking about digital is going to be helpful as you think of that process. So that's what I'll do in the next 20 minutes or so, sharing some of the findings. So first of all, digital, even when we can't necessarily define it, it is everywhere today. At home, we get our information from Wikipedia, from the Google. We communicate with WhatsApp or Facebook. We can use Uber to get from one place to the other. A lot of the things we used to go out of the house for, we do over the internet, whether it's banking or shopping. It really is everywhere on the consumer side and increasingly on the business side. But because it's so omnipresent, it is also one that is so hard to understand. So when we talk to CEOs and other senior executives across the globe, we hear them typically have a feeling a little bit like they were surfing on a shark-infested field. There is the excitement of the new, the kinds of things that the digital capabilities can help them do, soaring on these opportunities that come. But at the same time, there is the fear that there is something on the back, something that might be beating you, some kind of a digital attacker somewhere behind. And it's not just the companies who feel that way. Governments do too. Because a lot of the digital transformation is happening with consumers that have more access for free services and everything else, but governments tend to worry where the next wave of jobs come from. So for example, economists, my peers, they tend to really worry what the 4th industrial revolution will do for jobs. And I'll illustrate that contrast with you by comparing 2 cities, Detroit in 1990 and Silicon Valley in 2015. Both of them had 3 iconic companies. It was the big 3 auto companies in Detroit in 1990, and it's Apple, Facebook, and Google in Silicon Valley. When you compare their overall revenues in those 2 places, they're not that different, the same order of magnitude roughly. But when you look at their employees, the total number of employees in the Valley companies is less than a 1/5 of what it was in Detroit at the time. And that really is the big question. The economies of scale of some of these big technologies, the zero marginal cost of many of the digital solutions, that is the big thing that I think we economists don't really fully understand what that's going to mean, and that's scary for business makers. So given this uncertainty, it's almost certain that no one can claim to know exactly where we are going to end up on the whole digital future as it plays out. And what we have done on our end, because of the fact that there isn't even data that we can look at to exactly track what's happening, is to try to work through and take different angles, different lenses on the topic. And I'll go through relatively quickly some of those to give you a sense of what we have learned and perhaps provoke some of your own thinking on the topic. And I'll do it by starting first by talking a little bit about how do we measure and how do we understand the digital economy. Then talk a little bit of what it means to be a digital company, what are the government challenges, and last finish, what might it mean for Colombia, as you think of what that might mean in the coming decades. So to understand the digital economy, we have taken two different data cuts that we have looked at. First of all, trying to really roughly size, how do we measure digitalization across the whole economy? Second, we look at it at the company level. If we wanted to understand how digital is one company versus the other, how would we do that? And last, but definitely not least, how is digitization changing globalization? And it's pretty dramatically. So let's start. If you think of digitization as simply the ICT industry, it's a very small part of the economy. It's roughly 5% of the GDP, 10% if you stretch it by adjusting your prices because of the fact that prices, of course, of the digital goods have come down so fast. So less than 1/10. Clearly, this cannot be a real reflection of where digital is today. When you look at what's actually happening on what people are doing, what businesses are doing, it's a much bigger number. Here we have a few examples. In the US, which tends to be relatively far ahead on this one, 13% of retail is over the internet. More than a quarter of payments are done digitally. Actually, 2/3 of taxes are filed electronically. And then there are things that everybody already does. Everyone in the US checks their news online, and everyone has access to wireless broadband. So depending a little bit of how do you look at and how do you measure, the picture of the digital world is very, very different, even in the US. And clearly, we are in the process of the digital coming fast and furious. We see a big trend of new technologies coming from different ways, and those, each one of them, is going to continue to enhance and expand what, where, and how we can do things digitally. So clearly, we are in the middle of a very wide-ranging shift to a digital economy. So to understand companies then and look at them, we took 3 different metrics to look at. First, assets. How many digital assets do companies have? Do they have hardware, software? Do they have the data storage capacity? Do they have their assets, let's say, trucks or their industrial machines? Are they connected digitally? So basically, do you have the basic assets that allow you to be digital? Then there's the second question, which is, are you actually using them? How many of your processes, whether that's your transactions with your suppliers, or whether that is interactions with your customers, your payments, your social media activities, do you actually use those digital assets that you have? And last, how many digital assets do you have per employee? How empowered are your workers by digital assets? I think everyone has this one, but there may be a lot more tailored assets depending on what your function is. And what we did, we looked at this across the different industries and found in the US today a very wide range of industrial digitalization across the economy. Clearly, ICT is at the top. We looked at the overall digitization, for example. They started first, and they are there already. There are others that are very close behind, like finance and insurance. They invested on the assets. They have built the capabilities of their people. They have worked through over years the processes, and they are quite far there. There is another category, which are a lot of the, let's say, the electric utilities, oil and gas, etc., that have many digitalized assets but don't really use them. I think that's an industry where we see that they have made a lot of the heavy investments, but now it really is the capability of use that information, change the way they operate, and get the benefits from those changes. Most industries, the rest, as you look at them, are actually somewhere in between. They typically can have some real digital winners. Those are we have the green dots on the corner where you have some real exceptional digital players. You can think of retail, for example. That's clearly Amazon, eBay, etc. But then you have a long tail of smaller companies that are much further away. And then you have some industries that are just very, very far behind. So that's the picture for companies. How about the globalization? Just to set the context before we start talking about digitalization of the global flows, we saw until 2008, until the downturn, the global flows of trade and financial flows grow at twice the GDP level. So we're basically seeing a real fast growth on the share of global flows as a percentage of GDP. That ended in 2008. Even though we have largely recovered the levels we had in 2008 on trade, not as much on financial flows, as a percentage of GDP, the traditional flows we used to think globalization came from have really stalled. That, of course, doesn't mean that globalization has stalled, because when you look at the digital flows, this was the picture in 2004, less than 10 years ago, and a little more than 10 years ago. This is the picture today, 45 times the same size. And interesting on this picture, when you look at the two pictures next to one another, actually of the 2008 and 2015, is that you see much thicker flows between the south-south part. So we are seeing the globalization and transition and shift happening in much broader parts of the economy. Interestingly, this cutting down of the increase of the flow of the digital connections is a very different way of globalization. Not only are costs of doing transactions digitally much lower, so you can afford to do a lot more transactions than you did if you had to do it physically or do it in person, but also we can't really tell what website you are accessing. You really can't have borders the same way in the digital world as you do in the real world. And that means, for example, that when you're looking at media, where we get our news doesn't really look at the borders. And that has the potential of changing some industries very, very quickly, as it has done for media. So for example, let me point out to the Latin America component in here. 2/3 of all the websites visited on searches where you're actually looking for the specific search, they are to websites based in North America, not in the region. It's only 18%. It's interesting, though, to think about that may be partly a function of the fact that these are cross-border searches, so you don't have a lot of cross-border searches within Latin America. And it could easily be that that could change if there was a player who would aggregate across the Latin America region, but that's not happening necessarily today, and it's an opportunity in many ways. So that, of course, changes globalization quite significantly. We have a very different picture now, away from tangible physical goods to digital flows, shifts towards south-south trades from not only south-north and north-south. We have from capital-intensive to knowledge-intensive flows. Clearly, we have a lot of designs, software, processes within companies that are crossing borders. We don't have transportation networks, and ports are not as important now. It is all about the digital capacity, digital flows. It's no longer about multinationals. We see smaller companies come and play a role. It's not about monetized transactions. We are seeing a lot more free, consumer-driven flows. And we are seeing much faster, instant access to information across the borders that didn't necessarily happen before. So that's just to give you a picture of where we stand on the digital. We don't have exact measures. I hope we will very soon. I think we are all working collectively who are working in this space of trying to find some metrics that we can agree on. Hopefully we'll be able to track them. But what we do know is that the change is happening unevenly across the different parts. So businesses then. We saw that sectors are digitalizing at very different rates. That's definitely happening with companies as well. Even amongst large companies, there's a very wide gap with the digital leaders and the rest. So on average, the people who have their digitalized level of their assets, capabilities, and culture very tight into the digital, they are, the people who are not at the digital frontier are on average only 15% as digitalized as the rest. And that comes with a very significant cost, because when you look at the digital leaders, their performance is significantly higher. Their revenues are growing faster. Their profits and margins are growing 3 times faster. They obviously are more productive and more innovative. And interestingly, the wages of their workers are growing twice as fast. And the leaders, what they are doing, this is a different revolution. That's why I think the difference between the third and fourth revolution is very important, because they don't necessarily go and get a new automated robot, for example. They get oftentimes the basic assets, and then the hard work is trying to find a way you can actually get those processes tied into your businesses. And one of the challenges is that the benefits you get from digitalization are so widely spread. There's 4 quadrants of this, and I'll give you a quick example of each one of them. And by the way, my apologies if I see like I'm running. We are trying to keep the time so that we can have some time for the panel. panel at the end of it, so I'm doing faster than I planned. But I'll give a quick example of each one of the quadrants. One of them is improvements in operations, very big factor for many, many players. Increasing access to customers and creating new markets, particularly to the smaller ones that you might not afford to do before the digital era. People, processes, matching workers, etc. And last, innovation and collaboration. So let's start with the operational improvements. This is a picture of a typical manufacturing factory. There's a number of areas where you are losing value if you don't get the data and use it in some way in your decision making. And we have highlighted a few circles in here. On the back room, on the top left, you can see there is the room that's planning the next product. If you are failing to take into account full information on what your customers want, you might be over-designing or under-designing or wrongly pricing your product. On the bottom left corner, you see too much stacked inventory. I think that's an easy one for everyone to understand. If you don't predict your sales, or if you don't use the information you have, and if you don't communicate that to your suppliers, in that case, you clearly end up paying too much on that corner. In the middle, you have actually two machines that are not operating. Your asset utilization is low. In one case, it's out of order. It wasn't repaired. Maintenance wasn't done earlier enough. The second one is actually maintained even though it could have run for further. Both of them are challenges where you could, with preventing the maintenance and observing with sensors on how your machines are doing. These are all very typical processes across the manufacturing value chain. And when you take advantage of them, you can really make a difference little by little across many steps of the value chain. And when we look at them across the wheel of the different levers, if you want, the opportunities are very large. You can improve asset utilization for up to 50% by simply being able to do it so that you never need to stop your machines. Interestingly, this can lead to business process changes in business systems even. So for example, Rolls-Royce on their engines right now, they no longer just provide maintenance contracts. They basically say, we'll provide you a functioning engine on the airplane. We'll have it where you need it. And because of the fact that they own all the engines and they collect all the information on each one of these, they are able to basically keep their engines running pretty much all the time because they know so well when one engine is likely to be failing. They don't need to be expecting on what happens. So this is just one example. Labor is another one where particularly the expensive component for many companies. That is the part that you can do, you can also save on these levers. So that was the first one, operations. The second one is then new markets. For many large companies, that means that you can afford to go to those niches, you can afford to differentiate with the digital cost to customers you don't necessarily otherwise reach out to. For small and medium-sized enterprises, this actually can be a complete revolution because you have platforms like Facebook, eBay, Amazon, where you already have access to customers where your storefront may look exactly like somebody else's who is 5 times your size or 50 times your size. And this has been a big revolution. For example, eBay, in most of the countries where it operates, almost 100% of the companies that sell on eBay sell in another country too. They can have storefronts there. eBay provides some kind of connections and export help for them, and PayPal can be a form of payment. So all of these are factors that change fundamentally the access to foreign markets for small and medium-sized enterprises that weren't there before. That was the market access. Third is labor. Here we are seeing much more transparency on the labor market for hiring, whether it's monster.com or whether it's LinkedIn where you are hiring. You have access to a much broader set of folks. At the same time, there are online markets. You can have tasks done by TaskRabbit or have a taxi driver do it at Uber without necessarily having to have someone being hired to work with you directly. And at the same time, there's a broad range of tools for digitalized tools that allows you to really optimize your people processes behind. So that's another area where you can just very targetedly on the people gain large amounts. And last opportunity then is digital technologies on the innovation side. And this is probably where we hear the most about. This is where you have the new platforms, whether it's Facebook, Amazon for consumers, Alibaba in China for suppliers. This is where we really are seeing the big changes in the markets on what's happening. They are changing the economics. If you have a marketplace that has huge economies of scale, it may be good for the one winner, it may be very good for the small players on those platforms, but it may be tougher for the number 2 or 3 player on the market. So the fundamental economics can shift. You have digital goods, the ones that have close to 0 marginal cost in many cases. And here, whether it's Netflix, whether it's Kindle, whether it's YouTube, many of these are actually now given to consumers for free, which is for free so that they don't need to pay. Obviously, there is other means of gaining revenue. But that means that there is a very different market environment for companies. And last, there is digital wrappers that just help make whatever physical goods we are moving around be easier. So these were the examples of what changes can happen. And of course, particularly the last part is for the disruption, which is the shark part of the story for companies. And here's an example of what happened when Skype entered the market for phones. We basically saw a solid growth on volume of phone calls, after which the growth stopped and shifted completely to digital platforms. And I think that's something that we are seeing happening across different kinds of industries, and that's one of the very big uncertainties. So depending on what year you look at, you can, for example, you see education, Khan Academy coming in 2001 already, starting to dramatically change what that means. Professional services, my business, for example, there is, or lawyers is another example, needle finders, where stuff that was done with paralegals before is now done by digitalized folks. So the many moving parts where the opportunities tend to be the ones that dominate when we talk with our colleagues, when we talk with our friends in the corporate world across the globe. However, I think there is a fear and uncertainty that we don't know exactly how some of these platforms will move. So consumers and jobs, very quickly in the interest of time, consumers are the big winners here. I'll give you one story. When I was young, I had a 15-volume encyclopedia. My daughter, who is 15 now, she and her friends could never go without an answer. They never have to discuss who is right. They go, Siri, what is? And the answer is right there. Similarly, when I was dating my husband, who is from Mexico, it cost us $1 a minute to talk on the phone. I can hardly say that because that ages me very clearly on some era. And of course, my son now with his girlfriend thinks they have instant contact anywhere with the texting. Consumers are big winners on this story. And they are that across the board, whether it's the girl in Cartagena who logs into Khan Academy and gets her customized education work, or whether it's the Syrian refugee who is using Facebook to carter their way around the globe. And the challenge is that many of these things that are so wonderful to the consumers are free and they don't create revenues, which means the flip side is that there is no money that then goes to investments and job creations everywhere. And the big question is how much of the jobs in the economy today could be automated. And here we looked at the wages on different occupations and the propensity or the likelihood of them being automated. And these are not jobs that will go away. This is what part of their jobs could be automated. It's 20% for CEOs, for example. A lot of the data crunching, or data analysis, you could get much better ready-to-go fields to look at, preparing for meetings and decisions. I think that part, there's a lot less time spent on the studying, much better quality work already. It's a little bit more, actually, than for a landscaper or a gardener, but particularly on the middle field, that's the one where people worry the most, that we are going to lose those middle-wage jobs, because many of the low-wage jobs are like gardening, like healthcare and elderly care that are much tougher to take care of. So last, what does that mean for Digital Colombia, for example? If our colleagues here have worked and looked at where Colombia stands on some of these digital numbers, the punchline is you have pretty good access. So the assets are there for Colombia to be quite, more than half of the people have internet access, and the same amount has smartphones. So the starting pace for doing things digitally is very, very good and relatively not that far behind from the peers. However, the usage is still low, whether it's online shopping or online banking. Yet, there's no reason that that couldn't change. When you look at, for example, the online banking, the trajectory for Colombia could mean that we could be there by 2020, you'd be very close to the advanced industries level of digitalization. And I don't think that's the only sector where that could happen. I think there's a lot of things happening here, as there are elsewhere as well. Clearly, the race is on, as they say. So for companies, that is the big message for takeaways. For companies, the race is on. There is really no way of opting out. And while our implication sometimes is to think of who would be the one who would disrupt, who is the one who is going to win, look at your typical competitors, I think it's also worth asking why, not who, but why. Why would somebody change in the industry? Why would that make sense? And why should I try that rather than wait for someone else to do that? For governments, this is actually a harder transition than the third industrial revolution because of a lot of the changes in industry lines. Uber and Airbnb, I'm sure you know about the regulatory challenges. There is measuring, we don't really know how to track, we can't control flows, etc. So all of that means that governments, rather than fearing these, they should really see this as a priority because they know without solving these problems, we can't move ahead and the businesses can't do what they need to do. And for individuals, it really is your time. I hope you all will take everything out of the great benefits that we're getting as individuals and hoping to pass that to everyone. So digital divide won't be a barrier for any child in Colombia or beyond of getting the benefits. Thank you very much.
Gracias, señora Remes, por su intervención y continuando con el tema de la transformación digital, vamos a invitar en este momento a David Luna, ministro de las Tecnologías de Información y las Comunicaciones, para seguir hablando sobre este desafío digital y la transformación en este tema.